Hello everyone, Maurice and welcome to Things Invest. We talk about investing, finance, fresh development. For today's video, it's terms only. The investing I'm going to talk about today will be Ethereum ticket ETH. First, just want to say happy Sunday, everybody. Hope you have a great weekend so far. With respect to Ethereum, as I'm recording around 8:53 a.m. on the Eastern Time right now, it's currently trading around like $2,121, up about 1.46%. Ever since the consecutive sell days that we've had stem from some negative media affectation, but also with respect to obviously the things that we've mentioned so far, right? The market catalyst with respect to the weekend affectation on Friday, duration until on Saturday around like 5 p.m., 4:30 p.m. and we subsequently saw that rebound from there, right? I want to talk about some of the catalysts that we should be expecting going forward in the next couple of weeks, right? With respect to one is the Jack Dorsey's debut with respect to the B Word Summit that we should be anticipating going forward, the debates between basically Bitcoin versus other altcoin or specifically Ethereum, right? Calling it a shitcoin, if you may, right? Also, another one is the Fed's with respect to FOMC meeting that is expected to debut. If I look at the calendar for the Fed, it's expected to happen on sometimes around the 27th and 28th of July. So that's going to lay on the basically 2 Thursdays from now. And also on top of the fact with respect to the London Fork news, with respect to the debut on August 4th, that's going to be happening next month, which will obviously drive some anticipatory drag effects as we approach that date, right? So how should we be playing these market catalysts knowing the fact that these are relatively seismic ones, right? So I'm gonna go through a technical analysis to see what the level of resistance level that we should be watching out for, depending on which side of the spectrum we will be hearing from these three catalysts, because these could either hype the market really high or drop the market really high as well. So stay tuned, stick around, let's get some money. Alright, so moving on to the technical analysis for Ethereum ticket ETH. I'm recording as of 8:56 a.m. on the Eastern Time right now. Current trading now $2,122, up about 1.52%. While respectively, Bitcoin is also up as well because of the rebound that we've had with the 2 consecutive red days for the weekend affectation again, right? And just to recap a little bit on what happened, right? Ever since the rebound, right? We had that article that came out on the 27th with respect to the JP Morgan's research on the proof of stake going forward, right? On the current level is the $9 billion industry is going to expect to grow to 20 billion and it's expected to grow to 40 billion by 2025. Another news that we got was with respect to the one-time bet, right? The cost average of $2,100 from one unknown entity betting $542 million into Ethereum to raise somewhere around like basically 2 Thursdays ago and last Thursday respectively, right? So relatively large bet from a one entity, which shows a lot of bullishness, especially around the comparable level that we're trading at right now, right? And then we got another news from the London Fork article around the confirmations of the dates on August 4th. Again, that's another market catalyst that we'll be expecting going forward. And then some Goldman Sachs news about their stamp of approval on the Ethereum as a value proposition. And then the congressman, right, with respect to Barry Moore on purchasing anywhere around $5,000 to $75,000 worth of Ethereum, Dogecoin at Cardano to raise somewhere around like May and June. And then we had the negative FOMC meeting, right, which obviously drives some fears among the market on both the equity and the crypto side of the portions. Also, the job market report that came from the U.S. Department of Labor. And then ever since then, we got some positive news again, but I would say it's more of a mixed bag between, the media affectation, which stemmed from the London Fork news, which was positive. Also, the Square news on the hardware wallet from Jack Dorsey's, and the Sotheby on their global adoptions for cryptocurrencies going forward to provide to a more of a broader clientele going forward. And then kind of mix that together with the weekend affectation, which is the reason why we're kind of trenching water right now. Not doing much, right? So going forward, right, like the key market catalyst that we've identified so far is one that is going to be happening to the closest to us would be the 21st, which is the B Word Summit, right? So that's going to be a debut between basically Bitcoin versus altcoin or Ethereum, aka the shitcoin per Jack Dorsey. So that's something we have to watch out for, right? And I think we should be experiencing some anticipatory pressure starting on basically a week from the event, so on the 14th. Um, But we have to understand that on Saturday, the 17th, and the 16th on Friday, we might have some weekend affectation, right? So we might see a little bit a pump ahead of it, and then we might have some selling pressure on Friday and Saturday. So if you were to ideally like dollar cost average, I would still, practice the same historical trends, right? Use the historical methods that we've used, by buying on the weekends when it's red, because of people just creating a safe haven effect. And then wait until that pump that should be anticipating on 18th. And then that should drag up all the way to the 21st, and then we'll sell off from there, right? And then after the FOMC, not the FOMC meeting, after the B word summit, we'll have the FOMC meeting, right, which is going to happen on the 27th and 28th, right? So basically 1 week after the B word summit, right? So what I see going forward is that we might see some high volatility on the 22nd and 23rd, and the 24th. And I'm looking up. I have my calendar right in front of me. It's just I like to have my paper calendar instead of like looking on a Google calendar. And I'm just trying to paint a picture of how the momentum will look like in more of a psychological and the macro perspective. So I think after the summit, we should have some sell-off on the 22nd, and then we rebound from the 23rd. But however, Fridays and Saturday, a weekend affectation, we might kind of have a mixed bag. So we might be just kind of hovering from there, might even have some selling pressure. But we should rebound again, right, on the Saturday, because I do foresee 22nd, 23rd to be a relatively red day, depending on, obviously, right, the events, right, depending on the how the debate will turn out, right. But I do foresee some sort of like buy the rumor, sell the news type of affectation. And then Friday will rebound. And then on the 25th would be the Sunday. And Sunday is typically a green day. So we should expect some sort of buying pressure on Sunday. And then 26th would be exactly on a Monday, and 27th is Tuesday, which is the FOMC meeting, right? Basically the CPI report is going to come out. So that's pretty interesting timing, right? Sunday's typically a green day, and then we might see a little bit of a selling pressure on Monday because of the fear. Per the last meeting that we had, we know that the inflationary pressure is increasing. The quantitative tightening plan is foreshadowed to happen sometimes around like 6 months to 9 months out from here. So I do foresee some sort of selling pressure across the board, not just for equity, but for crypto as well. And then we might subsequently rebound on the 28th, right? And then on the 28th going forward, we might see a dip on the 28th, right? Or a rebound on the 28th, depending on how the market will look like on the 26th, on the 25th, because the equity market will give us an indicator on which directions we're going. And then on 29th and 30th going forward, we should see a rally going forward up until the August 4th London fork debut. All right, just to quantify the numbers and the technical analysis, right? So per the macro catalyst that we identified so far, right? No matter how volatile it is, we always bounce off the walls or the ceilings in the respective frames that we have here, right? And these are the levels that we identified so far. So if we have a red day, right, contingent on how severe that red day is, we always bounce off these resistance levels, right? And remember, breaking these resistance levels are typically relatively difficult, especially at the $2,050 level, right? So if we have some like negative news or some negative anticipatory pressure ahead of the summit, we potentially would just get to like the $2,050, and the worst will be breaking through that level to go down to the, firstly on the 1950, which is the first level that we did test, and then to 1900, right? But that's it. I don't think we actually will go further down to the 1850, because that's a really tough level to break down, contingent on breaking through the 2000, right? But if we have really, really positive news, right, which I do anticipate for the B word summit to be occurring up until the 21st, starting again on the following Wednesday, with the application baked in, that the full effect should be happening starting on 18th on Sunday. We should be leaping up to the 2050, to the 250, right? Next level to 2350, and then to 2450, And after the 2,450, we leap up all the way to the 2,750. So these are the levels to look at, right? On the MACD level, we are hovering away. Our side right now, we are kind of recuperating, so we are still normalizing, which is reasonable because we are just kind of hovering away. I think the news are, I mean, maybe the media companies are taking a break this weekend. They're not really trying to shock us or trying to pump any additional articles, that they just like waiting in dead water at the moment. So that's what I'm looking at right now. So to control your risk is to be looking at the frames that we have and dollar cost average wisely and logically going forward. All right, just to recap on all the numbers that we have in the charts, right? Again, we are at the really strong substantive level of the 2,150, right? Again, these are the walls that we're bouncing off of right now at a very comfortable consolidation zone. I think so far we've tested about 22 times right now, or 23 times if I'm not like counting exactly, but a lot of times so far, right, historically. In respect to the $2,050, that's a level that I've quoted 2 days ago, that these are the levels that will bounce off of, and that's exactly what happened, right, with respect to the weekend affectation, despite no our minimal black swan news that we've heard in the media affectation front right now, right? However, Sunday is still durating. We still have a lot of hours left on Sunday, so contingent on no more black swan news that happening today, we should see a relatively green day today. We should be just kind of hovering away, staying around like the 2,150, or potentially, hovering above to close to about 2,200, but not going all the way to 2,250, because it takes a little bit more pressure to break to the next level, because the comfort zone ultimately is the 2,150. We have a propensity to stay around there. However, if we see some black swan news today, we might get to the 2,050, right? So really dollar cost average wisely. But if you buy it now at the 2,150, that's a really good level to dollar cost average. I've been doing that for multiple times in the past already. So it's not a bad number to get in. With respect to corporate adoption, 20%, 9,800, 4.4 times your money from here. Alright, so that's it for today. Respect my technical analysis on Ethereum ticket ETH. Hope you guys have a great rest of the Sunday. Or if you are already, your Sunday's already past, it's Monday already, then have a great rest of the week for you. Really appreciate you guys, and please hit the like button, subscribe button, so the bell notification, and watch our next coming up. Take care. Bye.